This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices a little bit lower this morning. This directly linked to the Fed's statement yesterday after their policy meeting, which was a little less dovish than many analysts had anticipated. This causing some economists to believe that the Fed could taper their QE a bit sooner than what had been expected prior to the statement release. So some pressure early. However, I think that we will see recovery later in the afternoon in stock index futures as traders realize that the QE will continue for quite some time. In fact, the Fed has stated that they will continue to buy $85 billion in treasuries and mortgage-backed securities every month. As time goes on, I think we'll see more and more analysts thinking that QE will be extended and that the taper will take place later rather than sooner. But for right now, look for a little more pressure in the morning hours, but recovery gains this afternoon. Over in the foreign currencies, seeing the euro currency sharply lower. This after inflation numbers in the eurozone coming in much weaker than expected. Of course, this puts short-term interest rates under some pressure, which in turn undermines the euro currency. The dollar index coming under some additional gains, this after some short covering in advance of the Fed's two-day policy meeting, which concluded yesterday. Also, there's some talk that the Fed could taper earlier rather than later in response to that statement from the Fed. Our feeling is that even though the dollar index is a little higher, that it will come under pressure later this afternoon. Also, we are looking for a new leg down in the dollar index, so the long-term trend for the dollar still appears to be lower. And in the interest rate markets, we are seeing some pressure this morning, this in relation to the Fed's statement. Also, we had a little additional weakness coming in after the Chicago Purchasing Managers Index coming in much stronger than expected. However, longer term, as the QE continues from the Fed, this is the dominant influence that I think will take the credit markets higher. So even though we are seeing a little lower this morning in treasuries, I think there will be some afternoon recovery gains. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.